Hello, this is Craig Larson with Larson Financial Advisors for the Market Minute on March 16th, 2015. Well, I missed the February video. Things got a little crazy here in the office, so we're just catching up. Things have not changed too much since January overall. So in the broad asset class rankings, U.S. stocks are still in first place, bonds in second place, international in third. Now we have seen money market move up from fifth into fourth place, overtaking foreign currencies, and commodities are still dead last, sixth out of sixth place in the broad asset class rankings. And it's been a little bit of a manic depressive year so far. In January, stocks were terrible and bonds were great. In February, it was just the opposite, with bonds going down and stocks going up. Year to date, both of those categories are up just a smidge as of today. Now, one interesting note, the Nasdaq index has reached, or a couple of weeks ago, met its all-time high of 5,000, which was last hit in March of 2000. So back in March of 2000, it was the peak of the tech bubble. That market fell about 80%, clawed its way all the way back, and just touched 5,000 and has come back a little bit. So watch for the Nasdaq to try to make another run at 5,000. If it can break out and set a new all-time high, that's generally bullish. If it hits 5,000 and bounces down again, that's bearish. So it's just kind of an interesting thing to watch in that sector. Now, as far as oil, which has been a very interesting thing to watch over the last year, oil is testing its low point from a few weeks back, and on the charts, the daily and weekly momentum is negative. So I think more than likely oil is going to set a new low coming up here, and that may set up an even more interesting opportunity for oil later in 2015. So another interesting thing to watch. Now, just a couple points of interest here worldwide. In Greece, the Greek government has voted to allow pension plans to invest in Greek government bonds. Now, I think that's an absolutely horrible idea, and I would ask you, would you want your pension plan invested in Greek bonds? No way. So this is kind of a desperate attempt for the Greeks to find another pocket to borrow money from, and unfortunately I think it's going to end in disaster. So be glad you don't have to rely on a Greek pension for your retirement benefits. Next is Japan. We've talked about Japan a few times over the last year and a half. They are in a horrible demographic situation where they just haven't had babies for decades, not even close to replacement birth rate. They don't allow immigration. So their population is very aged and it's shrinking. And so for the first time since 1955, the Japanese savings rate has fallen to a negative level as the retirees, instead of investing into markets, are now pulling things out of markets to fund their retirement needs. And we may have mentioned before, but Japan now has more adult diaper sales than baby diaper sales. So you can just see that that demographic nightmare is really shifting things over there. It's really hard to grow an economy with a shrinking population. So be glad that you're not living in Japan and dealing with those headwinds. In the United States, our demographics are not great, but they are better than most of the developed world. So that does boost markets. Thanks for tuning in. As always, call or email me if you have any questions or would like assistance on anything, and have a great week.